Hello, welcome to the Restart Michigan webinar, Practical Tips for Protecting Your Company from Criminal and Civil Liability. I'm Lori Ostrom, Senior Director of Engagement with the Detroit Regional Chamber, and I thank you for joining us today for this session. The Chamber launched this series of webinars to help businesses across the state prepare through COVID. I would like to thank our guest speakers from Miller Canfield for volunteering their time and their expertise today. Before we get started, I wanted to let you know that all of the attendees are on mute. But you do have the opportunity to submit questions to the panel through the question function on the panel, your control panel. Sorry, it's a lot of panels, but you can submit your questions through the control panel. We will have time at the end to answer those for you. So at this point, I'm going to turn it over to Pavel, who will take you through their presentation. Thank you.
Lori, thank you very much. And ladies and gentlemen, thank you so much for finding the time to be here with us. My name is Pavel Hudzicki. I am the resident director in the Washington, D.C. and Doha, Qatar offices of the firm, and I'm delighted to introduce two of my colleagues, Richard Wallavender, who is the leader of our international group, and he's been with our corporate group, the founder of our Polish offices. Many years ago, Miller Canfield, as many of you may know, has been one of the first U.S. law firms to open a number of offices in Poland, and Richard advises clients on international legal matters, including FCPA, and he is the reason that Howard and I are here with the firm. Howard Weissman is an off-counsel in our DC office. He's just joined us recently from Baker & McKenzie. He has decades of experience advising on laws and regulations impacting international business operations, including FCPA. Prior to joining the law firm world, he served for over 25 years as Vice President and Associate General Counsel International at Lockheed Martin Corporation. We are an international law firm and serve many of you, many Michigan clients in doing business across the globe, including through our offices through China, Mexico, Canada, Poland, and Qatar. So with that, ladies and gentlemen, and with great thanks to Lori for hosting us here, we'll turn over to the discussion, and I will lead the discussion. We'll keep it to 45 minutes. We'll open up to questions, and as the questions come up, please kindly post them, and I will ask of our panelists. And let me start with the first question, and to sort of set the basics here. What is the FCPA, and why should a U.S. company, a Michigan company doing business internationally, care about it? Howard, if I may ask you to give your quick perspective.
Sure. Of course, I'll give a quick overview of the first part, Pavel, of what it is. The FCPA is a statute that was enacted in 1977 to halt the practice of American companies going overseas and bribing foreign officials to win business. It grew out of the post-Watergate reform movement. There were, before it happened, congressional hearings that had uncovered widespread bribery of foreign officials by U.S. companies, notably in the aerospace and defense industry, but other industries as well. The FCPA has two main provisions, the anti-bribery provisions and the accounting provisions, and is jointly enforced by the U.S. Department of Justice and the SEC. I'm just going to briefly touch on what those provisions are. So the FCPA anti-bribery provisions prohibit we'll tell you, but essentially someone subject to its jurisdiction from paying, promising, offering, or authorizing money or anything else of value, directly or indirectly, with corrupt intent, corruptly, to a foreign official, political party, or candidate to assist in obtaining or retaining business. The FCPA has one limited exception and two affirmative defenses. I will just tell you that with respect to the anti-bribery provisions, for each violation of them, corporations and other entities are subject to a fine of up to $2 million. Individuals, including directors, officers, and employees of companies, are subject to a fine of, for each violation, and there can be multiple violations, $250,000 plus imprisonment for up to 5 years. The FCPA also has accounting provisions, and the accounting provisions are in two parts. One is the books and records provisions, and the other is the internal control provisions. Books and records require issuers to make and keep accurate books, records, and accounts that in reasonable detail accurately and fairly reflect the issuer's transactions and disposition of assets. The internal controls provisions require that issuers devise and maintain a set of reasonable internal accounting controls aimed at preventing and detecting FCPA violations. So as you've noticed, the accounting provisions only apply to issuers, and that's a company that publicly trades on a U.S. exchange or is required to make SEC filings. Now, penalties for violation of this provision, the accounting provisions, very, very heavy, both for companies and individuals. Companies, for each violation, and business entities are subject to a fine up to $25 million. Individuals are subject to a fine of up to $5 million per violation, plus imprisonment of up to 20 years. Important concepts under the FCPA: anything of value. So the bribe doesn't have to be money. It can be anything: gifts, lavish hospitality, jobs or medical care for the official, foreign official, or his family, anything. Foreign official doesn't have to be just a foreign official. It could be an employee of a state-owned company, whether wholly state-owned or controlled by a foreign government or a foreign government-owned company. So, for example, Aramco in Saudi Arabia and Aramco Americas, the U.S. sub of Aramco doing business in Houston. Employees of those companies are foreign officials for purposes of the FCPA. The requirement to obtain or retain business is broadly construed, so the bribe doesn't have to be offered or paid to actually get a contract. It could be to get a tax holiday or preferential tax rate or any other improper business advantage. And finally, a key concept is directly or indirectly. This shows the danger of agents, sales reps, consultants, and other third parties, because you can violate the FCPA not just through what you do directly, but through the actions of your agents and third parties, as we'll talk about. Given the amount of time we've got, I will just tell you there's an exception for facilitating payments. It's very narrowly construed. These are small, routine, non-discretionary payments, or small payments for routine, non-discretionary actions by government officials. Essentially, they're grease payments. They're unlawful under the laws of most countries. They're very narrowly construed by the Department of Justice. So while it's an exception, it's very dangerous to rely on it. And at the bottom line, these are corrupt payments. There's two affirmative defenses. One is for the written laws and regulations, payments that are lawful under written laws and regs of a foreign country. This affirmative defense is worthless because no foreign country has laws permitting the bribery of its officials. The other one, there's an affirmative defense for payments that are directly related to the promotion, demonstration, or explanation of your company's products or services. That one is valuable, but the payments have to be reasonable and bona fide. Last thing to tell you with respect to the overview of the FCPA, jurisdiction, issuers, and these are the companies whose stock is traded on U.S. exchanges or make FCPA filings. It applies to them. It also applies to domestic concerns, and domestic concerns would be a citizen, national, or resident, any citizen, national, or resident of the U.S., or an entity with a principal place of business in the U.S. or organized under U.S. law. Also, it applies to agents of those entities, and there's also something called territorial jurisdiction. So if you're not one of those, if you're not an issue or domestic concern, but you cause directly or indirectly an act in furtherance of a corrupt payment within the territory of the U.S., you can be subject to the jurisdiction of the U.S. and subject to the FCPA. And the act in the U.S. can be very de minimis. It can be sending an email or making a wire transfer.
Thank you, Howard. So, so this is, I mean, this is a very, valuable background, and it is actually, it sounds pretty dangerous not to know about this and not to know how to comply with this. And Rick, from your practical experience of working, when clients show up in your office, what do you tell them? Why should a U.S. company, aside from sort of having all these consequences, what's your reason to tell them to think about FCPA?
Well, there's besides the potential jail time and the fines, they need to think about it. But a lot of companies, especially smaller companies, think that the FCPA sort of came out of the big defense industry scandals in the 70s and so on, and so companies might not think it applies to them, and they need to reassess that, because the FCPA applies to all U.S. companies and U.S. nationals, and it has as Howard said, a very broad scope, very broad reach. So it applies, and we'll talk about this later, but it applies, one thing that Howard mentioned, it applies to foreign officials who are not just government officials, but are employees of state-owned enterprises. And so take it in the auto industry, a lot who deal with a lot of companies, let's say in China or even Asia and Europe, and their customers, maybe they don't even know it, but they could be state-owned enterprises. And so if they're doing the wining and dining of customers that they might be used to doing in the U.S., that could be construed as a violation of the FCPA, regardless of where they're doing that kind of activity. If they are reaching to a state-owned enterprise employee, that triggers the FCPA. The other thing is two other areas that this covers that let's say smaller companies don't appreciate a lot. It covers their foreign subsidiaries. And prosecutors in the Justice Department are pretty sophisticated, and they have a way to attribute a subsidiary's actions to the parent company here, under a lot of legal theories, and we don't have to get into all that. But if a parent company is involved in the subsidiary's affairs, the company needs to assume that the subsidiary's actions are going to be attributable to that parent company. So even if there are not U.S. citizens or U.S. residents working in foreign subsidiaries, the U.S. parent is likely to be responsible for the actions. And then one other area that we'll talk about later, but this also covers not just direct foreign subsidiaries of a U.S. company. It covers their agents. It covers their sales agents or distributors that are working on their behalf in other countries, either selling products or servicing, providing services and goods. And those actions of those agents are going to be a lot of times could be attributable to the U.S. company, and we'll talk about that a little later. As far as the penalties are concerned, I would say, in addition to the potential imprisonment of individuals and the big fines on both the corporate and individual side, there's something else that is not appreciated enough for companies that aren't that familiar with it, and that is the concept of indemnification. The FCPA prohibits companies from indemnifying its officers or directors if they are individually held responsible. So you might have a nice indemnification agreement as an officer of your company, but that's not that is not allowed to cover any kind of FCPA violation. So So individual liability really does mean you're individually responsible for it. And then in the, other things, it's not, there's other penalties besides the fines and the imprisonment. There's potential exclusion from any federal programs for your company if you are found to have violated the FCPA. You could be held ineligible to receive any kind of export licenses. You suspended from issuing securities or involving yourself in the securities industry, and then there's the parade of horribles that follow from that, because an FCPA violation also could be a predicate for a RICO violation or a conspiracy case filed by your competitors. And then finally, I would say just the obvious that, if your company's involved in either an investigation or a conviction or found to violate the FCPA, it's going to be really tough explaining that to a potential buyer or investor in your company. So it has all those other kind of consequential harms.
Right. Thank you, Rick. And yes, we'll talk about some of these issues down the line. And I should add, based on my experience, while all of this sort of sounds very concerning and the consequences are truly dire, our foreign partners like working with US companies because we have FCPA, because we travel across the world doing business globally in the most ethical way, unlike our competitors. So that is why US companies are always very often welcomed by foreign procurement officers, because they do know that we will not be going out there trying to influence their decisions. So with that, Howard, what are some of the key areas for companies under the FCPA?
Well, Pavel, there are a number of them, and one would be, for example, doing business in high-risk countries, and I think we're going to talk about each of these in more detail, so I'll just give a very quick overview. But there are certain high-risk countries, as identified, for example, by the NGO Transparency International, which every year puts out a corruptions perceptions index, which ranks the level of perceived levels of public sector corruption in 180 countries around the world. So the least corrupt countries, typically in Scandinavia, are ranked at the top. And then there are countries, for example, Nigeria, Iraq, Afghanistan, that are kind of at the bottom. And then there are in the middle, but countries like China, Brazil, and India, important countries for American businesses, where corruption is indicated to be very high. So high-risk countries, third parties, as Rick mentioned, and that represents agents, distributors, consultants, sales reps, meals, gifts, hospitality, entertainment, and travel, and political and charitable contributions.
Thank you, Howard. So let's move maybe to the agent question, because this is really important. As Rick pointed out, and you just reinforced the point, we can have a great policy sort of back home, that applies to all of our employees traveling from the states overseas. But what about the foreign agents? How do you control that? How do you mitigate the risk? What are some of the measures that you could implement?
Well, the thing that you need to do, because you can violate the FCPA vicariously through the actions of these agents, you need to know who's working for you. You need to do very careful due diligence on them before you retain them, and you have to monitor them on a continuing basis while you're working with them. And the folks that are involved in bringing them on board and monitoring them have to be able to recognize what we call red flags, warning signals of potential corruption issues. So and this relates to not just sales reps and consultants and distributors and resellers, but others, customs brokers, freight forwarders, anybody who's performing services for your company. You have to be able to monitor, and the folks who are doing the monitoring have to be able to recognize and act upon the red flags, because if you don't, down the line, some prosecutor in the DOJ is going to go after you saying you had corrupt intent, because any reasonable person would have recognized the red flag and would have taken action.
And Howard, on that point, because you've done this for over 26 years at Lockheed. I mean, you've seen it all, as people in the industry say, and I know your experience was relevant to a publicly listed defense companies, but the issues, the traits, the red flags are probably the same. So I mean, the question to you and then to Rick is, well, what are the examples of the red flags? I mean, what have you seen, and when have you seen it? What do you do? How do you raise this with a client when, let's say, the CEO of a company thinks that particular contact overseas is the greatest contact that ever appeared? Well, the GC of the company or the CFO is raising concerns and saying this may not necessarily be the right avenue for us to proceed. So what are the red flags, and how do you raise them within the company?
Oh, Pavel, I'll give you a couple of examples of red flags, and then two quick real life cases. But red flags would include things like unusually large or unreasonably large commissions to agents, or unusually large discounts to sales or to distributors or resellers, payments to an agent or rep who's using a shell company or an offshore account, payments made to the rep or third party in a location other than where the work is being done, third parties who are recommended or requested by a foreign government official, or where the agent is in a completely different line of business than the one you plan to hire him for, or has no relevant experience or capability. So I'll give you two examples. One involved a proposed Malaysian sales rep who was going to be selling a satellite ground station in Malaysia. And a red flag for me sitting back in my office in the US was when she demanded a flat 15% commission. Now that was 3 times higher than the company's starting rate of its sliding scale. The company's normal rate was 5% to 1%, depending on the size of the sale. This lady said she wasn't going to work for less than 15% flat fee. But she said, don't worry about it, because as long as you pay me outside of Malaysia, the officials will never know. That was a problem. So, and when we met with her and conducted an in-person due diligence interview with her, we said, where is your office? How many employees do you have? It's not clear from the questionnaire you filled out. She told us that she did not have an office in Malaysia and she had no employees. And she said, I work through a Swiss lawyer who's my nominee, and he was based in Zurich. So when we asked how she's able to do that with no employees, she said, I'm a close personal friend of the Malaysian Prime Minister, and she winked at us. And this is a reason. It's a good reason to have a personal interview, because you get a sense of somebody different than certainly over a phone call. Needless to say, we did not hire that lady to be the representative. Another case in Thailand involved a proposed rep for the sale of a navigation and targeting pod that was going to go on the Royal Thai Air Force F-16 fleet. And there was a Thai Air Vice Marshal who told the business development lead for Thailand that we really needed to hire an agent because it was going to be a very complex and difficult sale. And he kept recommending a certain agent. Was already a red flag. When we went to Thailand to conduct the due diligence interview, we found that number one, we found that this proposed agent, had no experience in our industry, and in fact was a jewelry salesman. He had done his sole business was running jewelry stores on U.S. air bases in Thailand. But this Air Vice Marshal picked him, and when I went to Thailand to conduct the interviews, the Air Vice Marshal was concerned that we might not hire him, this person, and said, "Do you have any concerns?" And I said, "Well, he doesn't have much experience other than the jewelry industry." And the Air Vice Marshal said, "Don't worry about it. I'll put him together with somebody else so that you have more experience in your agent." Needless to say, this inordinate interest on the part of the Thai officer and the lack of experience by this proposed agent disqualified him. So we did not hire him, and we lost that sale. And we lost it, when I say we, Lockheed Martin, lost that sale to a French company at the time, Thomson CSF. There were articles in the Thai newspapers afterwards saying that Thomson had bribed the entire selection committee to make the sale, and that the product that they bought for the Thai F-16s was not fully compatible with the aircraft. So that was a case where by doing the right thing, Lockheed Martin lost business. But I'll tell you what, given the management of our company, they were happy not to win a contract that was going to be based on corruption, and that would have brought them terrible trouble had they won it.
Right.
Yeah, and let
Thank you, Rick.
me add to that in a sort of a more discreet kind of way that might sneak up on a company. And as Howard mentioned, I mean, one of the red flags is who and where, or with whom and where you're doing business. And this every company that does any kind of sales or business cross-border needs to be familiar with this Transparency International Index. They do it every year. They rank countries. They give them a score, you know, from 0 to 100, and 100 being the best, and 0 being the worst. But you know, generally speaking, you know, countries with a score of less than 50 are red flags, and there's some countries that are listed below 50, ranked, scored below 50, that you might not automatically assume are going to be in the potential corruption watch list. So there's countries like Cuba and Belarus that score 47, but a country in Europe, Hungary, has a lower score than Cuba and Belarus at 44. And people might not think that. You know, Howard mentioned China, but there's also India and Turkey that score in the low 40s. And then there's even worse places, or the lower scores, like Brazil, 38, Thailand, a 36, Philippines, 34. But there's one country that I want to point out and highlight, because a lot of Michigan companies do business with, and that's Mexico. Mexico is at the bottom tier. It scores on the Transparency International Index at 31, below all those countries that I mentioned. And so that's a red flag if you're doing business with or selling to companies in those markets. You're on alert, and you're deemed to know. And so I'll give you an example of you know, something, even if you don't have, a company doesn't have subsidiaries or plants in these other countries. Let's say you have a distributor, and the distributor, again, what Howard mentioned, requests a deep discount suddenly, you know, to prompt sales. Well, and you grant that discount without even asking why, or without suspecting anything. Well, you know, the practice in a lot of companies, sort of the custom, the trade, the natural corporate practice of agents is, I'm going to ask for a discount because I need some extra margin in order to in order to, facilitate the payment, pay a bribe, do whatever it is to sell product there. And everyone in that country knows that's how you do business. And so if you grant that distributor of yours or your sales agent, a discount, no one is gonna, and that is common practice in that country. You're not going to get a lot of sympathy from the Department of Justice on that. So I wanted to point that out, that these red flags are warning signs for you to be careful in how you're conducting business with that particular country.
Thank you, Rick, and thank you, Howard. So, and before you get to the red flags, I think that are very apparent where the things start happen, it is important to conduct proper due diligence on your potential agent. And I think at this day and age, we have so many tools at our disposal, and you don't have to hire a law firm, you don't have to hire an investigator. You can go online, look at the potential agent's LinkedIn profile, do some Googling. It's amazing how much you can discover, how many sort of inconsistent track patterns, how people's names come up in different contexts, in different jurisdictions prior to their contact with you, which effectively, if these are not red flags, they're very dark orange flags, and they sort of they make you pause. And law firms do this also. We conduct due diligence in connection with an acquisition or a sale of a company, right? So we understand the process. There is a number of investigative companies in the market, not just the large ones, but small consulting shops, and they can do the sort of the research for you, and it's sometimes time well spent to protect from from further issues. So aside from that, what Howard, when you look at it, so what can the companies do to protect themselves from from FCPA? And again, looking at your and Rick's experience, what are you seeing? What are the sort of processes and procedures that can help build these mitigating factors, especially that, as as Rick pointed out, the Department of Justice won't be looking at you with kind eye, and the indemnification provisions will not work for the management.
Well, Pavel, with respect to due diligence, a key factor is, you need to know who your partner is. So conducting due diligence, and you're absolutely right about the internet search and Googling them and finding out about them. But one reason why the TI Corruption Perception Index is so important is it gives you a tool for figuring out, how much due diligence is enough and how to allocate scarce resources. So if you're operating in a country at the top of the list, the least corrupt, like Denmark or Finland, the kind of due diligence you do is very different than if you're operating in, if you're trying to hire a third party in Brazil or China. Also, if it's a high-risk country, the DOJ and the SEC are going to look at, how did you allocate? Did you use enhanced due diligence techniques? So, for example, if you're operating in a high-risk country, we at Lockheed Martin and after I left and whatever, became an outside counsel. If you're operating in a high-risk country, you're going to want sometimes, depending on the red flags, to use an investigative service to understand how the company operates in that country, who the principals are, what their reputation is for honesty and integrity. And the government is going to look at that and look at how you basically figured out what your risk was, and did you design your policy accordingly? So DOJ and the SEC have, in looking at a compliance program, are asking three questions. Is the compliance program well designed? And that depends on figuring out what your risks are and making sure your program is designed to catch them, deal with them. Is the compliance program effectively implemented? And does it actually work in practice? So the DOJ and SEC put out something first in 2012 and most recently in 2020 called the Resource Guide to the FCPA, which talks about 10 hallmarks of an effective compliance program. In the interest of time, I'm just going to touch on them briefly. But first is a commitment from senior management and a clearly articulated policy against corruption. Second is having a code of conduct and compliance policies and procedures. Third is proper oversight, autonomy, and resources for the compliance function. So they're going to expect assigned responsibility for oversight and implementation to one or more of the company's senior executives who have appropriate authority, adequate autonomy for management, and sufficient resources. They're going to expect a periodic risk assessment so the program can be designed to meet the real risks the company is facing. They're going to look for periodic training and continuing compliance advice to employees. They're going to look for incentives and disciplinary measures for discipline for non-compliance and incentives for compliance. They're going to look at whether there's risk-based due diligence and whether payments are reasonable and proportionate, and and there's control on where the payments are going. If you're paying them into like a tax haven with bank secrecy outside with no connection to the jurisdiction, that's going to be a problem. They're looking for confidential reporting functions, basically a hotline and an internal investigation capability to police and monitor. They're looking for continuous improvement in periodic testing and review. That it should be a living program that strengthens itself and corrects weaknesses and adjusts as your business changes. And finally, they're looking at mergers and acquisitions, as was mentioned. They want to see pre-acquisition due diligence and post-acquisition integration. So all of those things are very important. And if you have them, it's really your best defense to liability under the FCPA, because a good program will enable you to prevent and detect corruption and thereby avoid it. It can also get you a lower penalty if you have a rogue employee who violates your policies and procedures, and in some cases may get you no penalty at all. They may decline enforcement because they're going to say it's not your fault, it was that employee, and they'll go after him, not you.
And let me mention one other thing that is every company should be doing, especially when it comes to using foreign agents, sales agents, and distributors, resellers, and that is you need to have an agreement. You need to have those contractual provisions whereby your foreign agent or distributor, they understand your policy and they acknowledge it, and it's very clear that none of these kinds of acts are tolerable and will be tolerated and will constitute, and that they will otherwise constitute a breach. So, companies tend to, especially smaller companies, tend to, sign whatever distributorship or sales agency agreement that they're given, but you need to have those protections in there for FCPA. And then I would also add, there is sort of, if you do find out that your agent or employee overseas or whatever may have violated the FCPA, there's a voluntary self-disclosure procedure in the FCPA which could mitigate things for you. But one final point is that this is not good. It works. It's not just for the FCPA that all this is required. There's other countries that have anti-bribery kinds of laws, including notably the UK. The UK Anti-Bribery Act is even more stringent and with less exceptions than the FCPA. And chances are, if you're doing work internationally, you're gonna bump up against that as well.
Thank you, Rick. I mean, that is a great point about the fact that we do have other acts out there, and arguably the UK Act is even much more aggressive in its outreach than the US one. So just moving on, and I'm mindful of Lori's timeline that is imposed, but let's move just to two sort of practical issues here and questions which you alluded to earlier, Rick, about the hospitality, right? And how do we advise clients, and what should clients do to ensure that they can conduct business consistent with their business standards, and whether hosting people to a ball game, to a lunch, to a golf outing, versus the rigid regulations of the FCPA. So maybe we'll just sort of start with, Howard, reminding us briefly, what is the role here? What's the issue? And then Rick, how do we deal with this on a practical level? And I also would like to cover in the same question not only hospitality, but also charitable contributions overseas, or sponsorship of events that your company may be asked to do. So, and we probably have around 3-4 minutes to address this question. So over to you, Howard, first, Rick then.
Pavel, with respect to hospitality, I can tell you how Lockheed Martin handled it, and it worked very well. We set up hospitality guidelines and made them known throughout the corporation as part of our anti-corruption policy, so that there were general rules for what kind of meals, gifts, entertainment, travel, both local and non-local, that could be offered to a foreign official anywhere in the world. Then there were specific rules based on each country where the corporation was doing business as to what was permissible in that country. Was it allowed to offer a meal to an official in Singapore? And the answer was no. Was it allowed to offer a meal to an official in the UK? And the answer was yes. But we did not want to be in the position of violating local law. And it was quick and easy and relatively inexpensive to get this information and compile it and make it available to everybody who would be in the position of offering hospitality. And there was a difference where wherever you could, you would set up a safe harbor for a meal, for example, which was very different. And there would be no safe harbor for offering non-local transportation to an official to fly from Egypt or Saudi Arabia to the United States. That would require prior review and going through different procedures. But so there were rules, everybody knew them, and they were enforced. And if you violated the rules, there were problems, and there was a reporting system that went all the way up to the Audit and Ethics Committee of the board.
Rick, over to you.
Yeah, maybe I just add a couple points. Is that as mentioned, there's no de minimis rule in the FCPA. There's no, you don't get to claim that you're under some kind of threshold. It's really the purpose is the inquiry is, what is the purpose of that payment, whether it's meals and entertainment and so on. And a lot of companies like to take their customers out golfing or to a meal, and and that's fairly standard and typical here. But again, if the local country in which you're operating, even if that it could be construed as a violation of local law, that's going to suspect you to it's going to be a suspect kind of a payment. So in practice, large hospitality, entertainment type expenses, of course, will imply that there's a bad motive, a wrongful purpose here. But you really got to be careful and watch out why and scrutinize why you're doing what you're doing, and does it look out of the ordinary. And then finally, as Howard mentioned, there's these internal accounting provisions that the FCPA imposes. And yeah, they're imposed on publicly traded companies, but that is also evidence that somebody's going to use even on privately held smaller companies. If you're not booking these payments in a correct way, you know, that's going to be evidence against you potentially. So it's a tough area, and that's why you need real clear policies on what's acceptable and what's not behavior-wise.
Great, thank you, Rick. So Howard, in 60 seconds or less, I mean, if you were to summarize 26 years of your professional experience working for a company, you know, why is it important? What's the parting message, so to speak? And then over to you, Laurie, after Howard finished.
The parting message would be, well, given my experience at Lockheed Martin, and since working with many companies of different sizes, there's no one size fits all with respect to compliance programs. The reason FCPA compliance is so important is failure to comply can subject your company to terrible penalties, harsh penalties, both for the company and for individuals. It can also damage your reputation for decades. In Japan, because of the Tanaka scandal going back to the 1970s, that helped lead, you know, when Lockheed bribed the then Prime Minister of Japan, 45 years later, it's still called the Lockheed scandal in Japan. And every time there's a bribe paid, there's an article about Lockheed. So this is not the way you want to be remembered around the world. So every company should have a policy designed to fit the risks that it's actually facing in its operations. It doesn't have to be complex. It doesn't have to be expensive, but it does have to work in practice. And it has to be done in good faith. There has to, I mean, it can't be done as a paper program just to put on the shelf and kind of pay lip service to compliance. I remember at Lockheed Martin, the chairman of the company would tell all of the employees at company meetings how critically important compliance with all of the laws were, all US and foreign laws, but especially the FCPA. He said, we have an important national security mission, and as a matter of pride, we have to hold ourselves above illegal behavior to make sales. And that kind of tone from the top, and the fact that the organization is serious about compliance, if you ever have a problem, is going to really help protect you. So this is something that every company should have and do.
Great. Thank you so much, Howard. Thank you, Rick. And Laurie, many thanks to you and our guests for being here with us. I don't see any questions in the panel. If they show up, we'll be happy to respond. And over to you, Laurie.
Thank you. I want to thank you again to Miller Canfield for the presentation today, and for all of you that are in attendance. I wanted to let you know that attendees, you will receive an email from me with a link to this presentation. And also, I failed to mention at the beginning, there were 2 handouts that are available within the control panel for you. I'll also include that in the follow-up email. If you'd like to learn more about webinars that the Chamber is hosting, please visit our website, detroitchamber.com, for any upcoming Restart Michigan webinars. Again, thank you all for your time today, and have a great rest of your day.